In this lecture, we'll be learning SA 200, SA 200, Standards on Auditing. Under Standards on Auditing, we have general principles and responsibilities for conducting an audit. SA 200 provides overall objective of independent auditor and conduct of an audit in accordance with Standards on Auditing. Okay, let's discuss SA 200 in detail. While learning audit subject, you have to assume you are the auditor of the entity and you will be conducting an audit for a client. So I am a chartered accountant. I will be conducting an audit for Reliance Industries Limited. So while conducting an audit, my overall objective is to first one. There are two objectives. First one is to obtain a reasonable assurance about whether the financial statement as a whole are free from material misstatement, whether due to fraud or error. This enables the auditor to express opinion on the financial statement are prepared in accordance with all material respect in accordance with applicable financial reporting framework. So auditor has to obtain reasonable assurance about whether the financial statement as a whole are free from material misstatement, whether due to fraud or error. This enables the auditor to express an opinion on whether the financial statements are prepared in all material respects in accordance with applicable financial reporting framework. Also, the auditor has to report on the financial statement and communicate as required by standards on auditing in line with auditor finding. So, first one is we'll learn the meaning of words in the objective. First one is assurance. What do you mean by assurance? I'll give a third party. What do you mean by third party? The stakeholders. Stakeholders include creditors, debtors, contracted, or investor in the entity. There are stakeholders in the Reliance Industries will trust my report. That is, I'll give a assurance on the report in case of independent audit. So I'll give a reasonable assurance. I will not give absolute level of assurance. I'll give only reasonable assurance. So what do you mean by reasonable assurance? Reasonable assurance means offers a high level of assurance that the financial statements are prepared. Also, it is free from material misstatement. It gives an high level of assurance that the financial statements are free from material misstatement. But it is not a complete guarantee. The auditor is not giving a complete guarantee. Auditor only gives absolute level of assurance, only an reasonable assurance on the financial statement. Okay. Then, what do you mean by financial statement? Financial statements include statement of profit and loss account, statement of changes in equity, and also statement of cash flow, also balance sheet, disclosures and notes. Okay, it is covered for a financial year. What do you mean by financial year? It starts from 1st April, ends on 31st March. Okay, the financial statement are free from material misstatement. What do you mean by material misstatement? First, we have to understand what is misstatement. Misstatement means application, presentation, classification, disclosure on financial statement reported by the management when there is a difference between reported by the management as per applicable financial reporting framework. Also, there is a as per required by the applicable financial reporting framework. What do you mean by applicable financial reporting framework? The applicable financial reporting framework means accounting standards. It's an accounting standards prescribed by ICI. Okay. When there is a difference between reported or a disclosure made in the financial statement, when there is a difference between reported in the financial statement and required by the applicable financial reporting framework, then it will lead to misstatement in the financial statement. Then what is material? Material means the material misstatement arises only identified misstatement influences the decisions of the user. When misstatement influences the decisions of the user, economic users, that is stakeholders. If it affects the decisions of the users, then it will be considered as a material misstatement. How auditor will identify it as a material misstatement? It will be based on professional judgments used by the auditor. Okay, we'll discuss in later what do you mean by professional judgment. Okay, we have understood what is reasonable assurance, what is financial statement, what is misstatement, and also what is material misstatement. Okay, it enables the auditor to express an opinion. Auditor will express the opinion as per SA 700 in his independent auditor report, whether the financial statements are prepared as per applicable financial reporting framework. If it is not prepared as per applicable financial reporting framework, it will lead to misstatement. So it will lead to fraud or error. What do you mean by fraud? Fraud is an intentional act, but error is an unintentional act. Fraud can be committed by employees, management. The error is an omission, or it is not an intentional act by persons. Okay. Second objective is to report on the financial statement and communicate as required by standards on auditing in line with auditor's finding. It deals with auditor will report as per SA 700. The 700 is covered in a separate video. Go and watch. Okay. Reasonable assurance offers high level of assurance on the financial statement. We have learned there is an inherent limitation while conducting an audit. Auditor has to conduct as per standards on auditing. There is some inherent limitation that auditor may not obtain a reasonable assurance. Okay. Due to inherent limitations of audit, there is an unavoidable risk that some material misstatements of the financial statement may not be detected, even though the audit is properly planned and performed. Auditor has planned as per standards on auditing and performed audit procedure as per standards on auditing. Even though he has performed audit with 100% quality, there is an unavoidable risk that some material misstatements may not be identified. So it will lead to some audit risk. So, however, inherent limitations of audit are not a justification for auditor to satisfied with less than pervasive of audit evidence. The pervasive of audit evidence is discussed in SA 700. Okay. Due to inherent limitations of audit, there is an unavoidable risk that the auditor may not be detect all the material misstatement existing in the financial statement. So, what are the inherent limitations? There's an nature of financial reporting framework. Due to nature of financial reporting framework, auditor may not be detect material misstatement in the financial statement. And the nature of audit procedures, as per the standards on auditing prescribes more number of procedures to conducting an audit. So it will lead to there is an limitations on the conducting an audit. Okay, need for audit to be conducted within a reasonable time. When there is a due date to complete the audit, or that is within the reasonable time frame, the auditors may not be identified or obtained evidence on the misstatement. So it will lead to limitation on conducting an audit and a reasonable cost. Okay. Next one is professional skepticism and professional judgment. First one is professional skepticism. Professional skepticism is an attitude that includes questioning mind. Okay, I am an independent person. While I have to keep a professional skepticism while conducting an audit. If I'm going to a client place, I have to be maintain professional skepticism in the client place and also while conducting an audit. It includes the attitude of questioning mind and being alert to conditions that indicate misstatement due to fraud or error and critical assessment of audit evidence. While evaluating the assessment of audit evidence, auditor has to maintain a professional skepticism. Okay, the professional skepticism should be kept by the auditor while planning and performing the audit with a professional skepticism. Okay, while conducting an audit, auditor has to keep the professional skepticism. Next one is professional judgment. It is an application of relevant knowledge, training, experience provided by auditing, accounting, and ethical standard for making an informed decision. The professional judgment means auditor will make a number of assumptions and judgments while conducting an audit. So auditor has to take decisions. While in case of material misstatement, auditor will use the professional judgment, that is knowledge, training, experience while conducting an audit. It is an informed decision. Okay, the auditor shall exercise professional judgment in planning and performing the audit. While performing the audit, when there is a doubt about the any transaction, auditor will use the professional judgment to take informed decision about the material misstatement, whether the misstatement is material or not. What are the fundamental responsibilities of management and TCWG in relating to conducting of audit? The main responsibility is to preparation and presentation of financial statement as per financial reporting framework, design and implementation and maintenance of internal control. The main responsibilities of management is to preparation and presentation of financial statement as per applicable financial reporting framework. Also, the responsibility, preparation and presentation responsibilities of a client, that is management responsibility. Auditor will examine the books of accounts. Only auditor will conduct an audit. He will not prepare the financial statement. He has to audit the financial statement. He will conduct the examination on the financial statement. Also, the ultimate responsibility of management is to design and implementation of internal control in the organization for preparation and presentation of financial statement. In case of internal control, it will lead to better presentation and preparation of financial statement. When entity has a good quality of internal control, it will lead to preparation and presentation of financial statement is a high level. Okay. Provide auditor on all information. Auditor has to, the management has to provide all information relevant to preparation and presentation of financial statement. Okay. Any additional information that the auditor requests from the management. If auditor requests any additional information, the management has to provide the auditor. Okay. Unrestricted access to those, that is those persons within the organization from whom the auditor can obtain evidence. If auditor wants to inquire any person, the management has to give access to the auditor to inquire the persons in the organization. Okay. Certain assertion or subject matter where it is difficult to detect material misstatement due to potential effect of inherent limitation. So these are all other inherent limitation. What are the other inherent limitation? Due to fraud involving senior management or a collusion among the employees or managements. Okay, when there is a fraud involving senior management, the fraud may not be detected. Okay, okay, existence of completeness of related party relationship and transaction. When there is a related party transaction, the auditor may not be able to detect the material misstatement. Also, occurrence of non-compliance with laws and regulations. There are many laws and regulations. So the auditor, which is non-compliance, may be directly related to financial statement, or it is not directly related to financial statement. If it is related to financial statement, auditor may be able to obtain evidence on non-compliance. In case of non-compliance not directly related to financial statement, auditor is not able to obtain evidence on the misstatement due to non-compliance. Future events or condition, that is going concern. In case of auditor may not be auditor don't know about the future. When there is a doubt on the entity's ability to continue as a going concern, the auditor is not able to identify the material misstatement. Okay. Future events or condition that causes the entity to cease to continue as a going concern. See, what do you mean by going concern? We'll assume the entity will run for a foreseeable future. Sometimes the entity is not on a going concern basis. So this will lead to material misstatement. That's it. SA 200. Quickly revise SA 200. SA 200 prescribe overall objective of independent auditor and conducting an audit of in accordance with standards on auditing. There are two objectives. First one is auditor has to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error. This enables the auditor to express an opinion on whether the financial statements are prepared in all material respect in accordance with applicable financial reporting framework. Also, auditor has to report on the financial statement and communicate required by standards on auditing, that is in line with SA 700. Okay. Reasonable assurance should be an high level of assurance. It is not an absolute level of assurance. Okay, there is inherent limitation. Even though audit is planned and performed very well, the auditor may not be able to detect the material misstatement because of unavoidable risk. The unavoidable risks are the inherent limitations are due to financial reporting framework or audit procedure, that is standards on auditing. There is a reasonable time. There is no reasonable time to conduct the audit or a cost to conduct the audit. What do you mean by professional skepticism? Attitude attitude that includes questioning mind, being alert to the conditions that indicate misstatement due to fraud or error. Also, auditor has to maintain professional skepticism during planning and performing the audit. What do you mean by professional judgment? It is an informed decision taken by the auditor by applying relevant training and knowledge and experience, by using standards on auditing and accounting standards and ethical standards. Okay, auditor has to exercise professional judgment in planning and performing the audit. What is the fundamental responsibilities of management and those charged with the governance while conducting an audit? The preparation and presentation of financial statement is an ultimate responsibility of management, and also the responsibility include it has to design and the implementation of internal control in the organization. Also, provide auditor about all the information relevant for preparation and presentation of financial statement. Also, any additional information that the auditor requests from the management and TCWG, unrestricted access to the those within the entity from whom the auditor can obtain evidence. Cert- Certain assertions are subject matter where it is difficult to detect the material misstatement due to potential effect of inherent limitation, where other limitations, that is fraud, related party, and non-compliance with laws and regulation, when there is a going concern ceases to be a going concern, and the entity ceases to be a going concern, the material misstatement cannot be detected. Some of the areas. That's it.